market's attention is firmly fixed on the meeting by the Federal Reserve's rate-setting committee and the associated press conference on Wednesday. Whatever the outcome, the markets are likely to move. There's no doubt that the Fed will cut rates. The question is whether it's a 25 or a 50 basis point move. And the markets are divided. Pricing is for a 40 basis point cut. So one way or another, it will be a surprise. Moreover, the market is pricing a whopping 120 basis points of cuts this year. Now, there's only 2 meetings left this year after one this week. So if the cut's only 25 basis points, that would require consecutive 50 basis point cuts at the next 2 meetings. Highly unlikely, I would say. Now, it's unusual for the Fed to leave the market guessing to this extent ahead of the meeting, especially so close to the US presidential election. And I can only presume that the committee itself is split, so the press conference has been unable to give clear guidance. A 50 basis point cut, that would probably mean that both bonds and equities rally. If it's only 25, well, they may well both sell off. And it's hard to see the market pricing in much more for cuts next year. There's a cumulative total of 250 basis points priced in, which would take official rates down to 2 3/4. But if the cut's only 25 basis points this week, I think that number would come down. I can't see it going up much. Now, if we take a step back, the US is en route for a soft landing, with continued growth there in the US and elsewhere, and falling inflation throughout the developed world. And that's a good background for risk assets. But there's a lot priced in for equities too, in terms of optimism over earnings, especially for the Magnificent Seven. Now, the Fed are not the only central bank meeting this week. The Bank of England, they meet on Thursday. And no one seriously expects a cut, but we'll be closely watching the vote. Dove Svati Dingra, she'll no doubt vote for a cut, she normally does, but if she's the only one, that would be taken negatively. 7-2, maybe neutral, 6-3 would be positive. Problem for the UK is the low inflation of wages and services is slowing. They're both still far too high. Now, we get inflation data out this week, and that'll give us a further clue as to what's going on, but the basic message is the Bank of England like to be cautious in cutting rates, and their next meeting isn't until November, which will deliver the next quarter basis point cut. A lot more cautious than the Federal Reserve. Whatever happens, it looks set to be an exciting week. Goodbye from me.